Afternoon, my dear students. Today we are going to continue with NPO, that is not-for-profit earning organization, or accounting for not-for-profit earning organization. And like the previous day's class, today also we are going to take a complete sum where we are going to be learning about preparation of income and expenditure account along with the opening and the closing balance sheet. So here is the question: the receipts and payment account of Shankar Sports Club is given below for the year ended 31st of March 2006. The receipts and payment side is there. So let's start with the marking with the marking of the items. So first of all, opening cash in hand. So it will be going in the opening balance sheet, isn't it? Opening balance sheet. Then the next item, and two entrance fees. It will go in the income and expenditure account credit side. That is the income side, correct? Then coming to the next one, donation for building. It is a specific donation, right? So specific donation will go to the balance sheet, isn't it? It will go in the balance sheet liability side. Remember why liability side? Because your donation for specific purpose, you can use only for that purpose. So until unless the work is done, it will not be taken as your property. Okay, once the work is done, then it will be, this donation will convert into building, then the building will become the asset of the organization. Then locker rent, it is also income and expenditure account item, so it will also come in the income and expenditure account credit side. Okay, so coming to the next one, life membership fees, it will also go in the balance sheet liability side. Okay, because it is also a long term receipt from a capital receipt actually. Okay, it is a capital receipt, so it will go in the balance sheet liability side. Then profit from entertainment, profit from entertainment will also go in the income and expenditure account credit side. And at last, subscription, subscription also will go in the income and expenditure account credit side. Okay, so this is how the items will be placed. I hope all of you have understood this part. Now moving to the payment side, we'll start with rent. So as we can see, the first item, that is rent, it will go in the income and expenditure account. Which side? Debit side, right? Because it is an expenditure, so it will go in the income and expenditure account debit side. Now coming to the next one, wages and salary, only wages, sorry, wages. This will also go in the expenditure side, income and expenditure account expenditure side. Then moving to the next one, billiard table. Billiard table is the asset of the firm, actually NPO, okay, or the club. Okay, so this will come in the balance sheet, closing balance sheet. Okay, closing balance sheet. Okay, closing balance sheet asset side, right? Closing balance sheet asset side. Here also, I'll just mention this donation for building will come in the closing balance sheet. Okay, as well as this life membership fees will come in the closing balance sheet. Fine. Now coming this side, we have got billiard table, closing balance sheet asset side. Then coming to the next one, furniture. Furniture will also come in the closing balance sheet asset side. Okay. Coming to the next one, interest. Interest will come in the income and expenditure account credit side. Sorry, it's a payment side, na? Payment, so it will go in the debit side. Since we can see that it is a payment, so we are going to pay it, so it will be in the debit side. Then postage, postage were there, so postage also will come in the income expenditure account debit side. Okay, it will also come in the income expenditure account debit side. Then salary also will come in the income expenditure account debit side. Then the last one, that is cash at back, cash in hand. So cash in hand will go in the closing balance sheet. This is a closing balance sheet item, so it will go in the closing balance sheet asset side, right? Closing balance sheet asset side. Now let's go for the adjustments. Prepare income and expenditure account and the balance sheet with the help of the following information. The information are given here. We're going to use it and prepare the income and expenditure account. Okay, so what is given here? So let's see. First of all, outstanding subscription were outstanding on 31st of December 2005, 1200 last year, right? So this rupees 1200, what is their treatment for this? 1200 rupees, right? It will be coming in the opening balance sheet. Once it will come in the opening balance sheet, opening balance sheet asset side. Okay, opening balance sheet asset side, and again what will happen, it will be deducted. Okay, it will be deducted from this year's subscription, because since it was last year's outstanding, that means we have received this year. As well as we can see that there is no information given about how much amount of subscription we have received from last year. So it is obvious that whole of amount of 1200 we have received from last year, so it will be deducted from the subscription. Okay, it will be deducted from the subscription in the income and expenditure account. Okay, this is the portion, right? Now for the remaining part, and rupees 2300 on 31st of March to 31st of December 2006. So this rupees 2300 rupees were outstanding on 31st December 31st March 2006, right? So what will happen there with this amount? This will, first of all, one thing, it will come in the closing balance sheet. Okay, closing balance sheet. Why it will come in the closing balance sheet? Because this amount of money is outstanding for the current year. Okay, so it will be coming in the closing balance sheet asset side. This amount of money we are going to receive, we are supposed to receive, so it will come in the closing balance sheet. And again what will happen, it will be added up, with subscription. Okay, why it will be added up with the subscription? Because this is this year's outstanding. Okay, so this will be added up with the subscription, okay, in the income and expenditure account, right? Clear? It will be added up with the income and expenditure account. Clear? Now coming to the next one, that is opening stock. What is there? Opening stock of postage stamp were rupees 300 and closing stock was 200. So what will happen with rupees 300? See, rupees 300 is opening stock, isn't it? So that will be added while calculating stationeries consumed. Okay, sorry, postal stamps consumed, like what we have done in the previous day with the stationery, right? And rupees 200 is a closing, isn't it? So this rupees 200 will be deducted, because this year we have not used it, we are going to use it next year, so it will be deducted from this year's amount. Okay, so 300 will be added and 200 will be deducted, and this whole procedure will take place in calculating postal stamp consumed. So you can see that we have already got postal stamp. Do we have any postal stamp? Yes, by postal 1000. So this is our payment. So what we will do, opening 300 is there, opening stock of postal stamp, that will be added 300, plus purchase of postal stamp 1000, it will be coming 1300, less closing stock of 200. So closing stock that we are not using, 200 will be deducted. In the outer column we'll have 1200. That is nothing but the postal stamp consumed. Fine. Now let's go to the next one. Then in the next point, what we have, rent rupees 1500 relates to 2005, and rupees 1500 is still unpaid. So rupees 1500, there are two items. Okay, one more thing here, what you have to do is that this 300, okay, this 300, once it will come in the balance sheet, okay, this 300, once it will come in the balance sheet, which balance sheet? Opening. Okay, it will come in the opening balance sheet, right? And this 200 will come in the closing balance sheet. Okay, both are having their own purpose. So once one, if I highlight, the other one will be automatically clear to you. Okay, this will come in the closing balance sheet, and this will come in the opening balance sheet, right? Opening balance sheet, and this portion as a whole will come in the income and expenditure account. Okay, income and expenditure account. Clear? It will come in the income and expenditure account. This is how it will be solved. Now coming to the next one. Just a minute. Yeah. So now moving to the next part, that is this rupees 1500 raised to 2005. So there are two treatments again for this. Once again, once it will come in the opening balance sheet side, liability side. Okay, and again, what will happen? It will this the same amount will be deducted. Okay, will be deducted from what? From rent. Okay, from the rent from this year. Okay, why? Because this rent relates to last year. So if there is no information, that means we have paid it this year, so it will be deducted from the rent in the income and expenditure account. Here, this 1500 rupees. Fine. Now what to do with the remaining? What is the remaining amount? The next amount is rupees 1500 again. Rent rupees 1500 relates to 2005, and 1500 is still unpaid. Okay, and rupees 1500 is still unpaid. That means what? This rupees 1500, the previous one, it has been paid, finish. The new rupees 1500, it has not been paid till now. So in this case, what will happen? The treatment is almost the same. Okay, only the thing is that it will once come in the closing balance sheet, and again it will come in the opening in the income and expenditure account. Okay, it will first of all come in the closing balance sheet. Okay, closing balance sheet liability side as rent outstanding, and again it will be added with the income rent in the income and expenditure account. Okay, these are the two treatments for this. Okay, clear? Okay, now moving to the next one. On January 30, on 1st January 2006, assets were like this. Assets that include furniture of 15,000 on 31st of December 2006, valued at 22,500. What is our year ending? 31st December 2006. So as on 31st December 2006, the value of furniture is 22,500. So what we will do, just find out the calculation, and we'll see what is the changes, because we can see the furniture has been purchased. How much? Payment side means purchases. How much? 10,000. If any asset is in the payment side of the resistant payment account, it means that we have made payment for that in that year. That means we have purchased the furniture in that year. So furniture has been purchased 10,000. Already we were having, I'll just show you the note. Already we were having 15,000, right? And then the year ending we have got 22,000. So we'll get some information from that, that what is the change in the furniture. Okay, the change in the furniture. Change in the furniture, and this change in the furniture, since there is no information about the sale of furniture, so that will be taken as depreciation on the furniture. Okay, how will you do calculate? How will you calculate? I'm just showing you here. See, depreciation. Why I'm telling it directly depreciation? Because it is, no information has been given about the sale of furniture. Okay, so we'll take it depreciation. Suppose if there is information about the sale, then we'll be considering it sale. So what will be the depreciation on furniture? See, it will be rupees, what is the opening balance? 15,000, right? 15,000 plus what is the purchase? We saw the furniture purchase was 10,000. So plus 10,000 less closing, right? What is the closing balance? Closing balance is 22,500, isn't it? So what is the remaining amount? What is coming? Remaining amount, it is coming to 25,000, 2,500 rupees. So this is the depreciation on furniture. Okay, this is nothing but the depreciation on furniture. Clear? This particular part, try to remember it and understand it nicely. What has happened here? Depreciation on furniture. We are calculating depreciation on furniture because of the reason that there has been no information about the sale of furniture, right? So since there is no information about the sale of furniture, So what will you do is that we will simply calculate it and we'll take it as depreciation on furniture. What will you do? Let's find out the opening balance. Here it is given 15,000 and the closing balance is 22,500, right? And there is a purchase of 10,000. So opening plus purchase minus closing, we get depreciation. So opening furniture was 15,000, purchase was 10,000, less closing was 22,500. So how much we have lost? 2,500. So that is the depreciation on furniture. Okay, and it will come in the, remember that depreciation comes where? Depreciation comes in the income and expenditure account. Okay, depreciation comes in the income and expenditure account. Okay, this will come in the income and expenditure account. Which side? Debit side. Clear? It will come in the income and expenditure account, debit side. Right? Now coming to the second part. So remember one more thing, what will happen here is that this furniture opening balance of 15,000. Remember what will happen with this 15,000 rupees will go in the opening balance sheet. Okay, it will go in the opening balance sheet. Opening balance sheet, asset side. Okay, and along with that, this closing balance is 22,500. Okay, it will go in the closing balance sheet. Closing balance sheet, asset side. Okay, closing balance sheet, asset side. Right. Now coming to the last part, that is liabilities of 10% loan. 10% loan was 20,000. So there will be totally different treatment here. Okay, why? Because of the reason that this loan amount is mentioning 10%. That means that is the interest rate. So there are some special things to do. First thing, this rupees 20,000. What will happen with this rupees 20,000? This 20,000 rupees of loan will go in the balance sheet. Close the opening balance sheet as well as opening balance sheet and closing balance sheet. Okay, opening and the closing balance sheet, liability side. Okay, and again you have to find out one thing here, that is the interest. Okay, that is the interest. It will come in the opening balance sheet, asset side, opening balance sheet and closing balance sheet, liability side. And again there is a change. What is the change? We can see that there is an interest. So what is the interest? It is 10% interest. Okay, so this 10% interest, what will be the treatment? This is clear, I guess. The remaining is the 10% loan, 10% interest is there. So let's see whether we have paid any interest. We have to just calculate and see what will be 10% of 20,000. 10% of rupees 20,000 is rupees 2,000, isn't it? Is rupees 2,000. Let's see how much interest we have paid. By interest, it's 2,000 already paid. So we can say that it has been already done. So no need to do anything. Now, in case if it was not done, then once it will come in income and expenditure account, and again it will go in the balance sheet liability side. Right now here not required because we have already done that. Interest already we have paid 2,000 rupees. Okay. So the markings are over. Now we can go for the solution. So let's prepare the income and expenditure account and the opening balance sheet. First of all, we prepare the opening balance sheet. So we'll go for preparing the opening balance sheet first. If you want, you can prepare the income expenditure account and then you can go for the opening balance sheet. That's no problem. So we can start with the income expenditure account first. Okay, we'll start with income expenditure account first. So let's start with the items. First will be subscription. Let's start the income side. So subscription, what is that? 40,000, right? And what is the adjustment? We can see that in the income expenditure account, we have to deduct 1,200 rupees. We have to deduct from the subscription, right? In the income expenditure account, and this 2,300 will be added in the income and expenditure account because it is related to current year. So let's go for that. By subscription, first of all, it should be subscription. They have given it in a later part, no problem. You can write, you must write it in the first. Okay, by subscription 40,000 less outstanding for 2005. See, subscription outstanding for 2005 was 1,200. This will be deducted, so it will be less subscription outstanding for 2005 1,200. It came 38,800. Then after that, we have got rupees 2,300, which is still outstanding for 2006. So it will be what? Added. So in that case, what will happen? Outstanding for 2006, it is 2,300. Altogether, it comes 41,100 rupees. So this is nothing but subscription. Okay. Then coming to the next one. Once it is over, then we'll see the next item. That is, what is the entrance fees? Entrance fees, it is 3,200. So as a whole, it will come here by entrance fees 3,200. Then coming to the next one, after entrance fees, where is the incoming? Yeah, locker rent 1,200 by locker rent 1,200. Then we have the next one. Where is that? Profit from entertainment 3,000 rupees. So it will also come like that way, by profit from entertainment 3,000 rupees. Okay, and subscription we have already done. Let's see what else left. One item, two, three, four items we have done. Anything else? No. Now let's go to the adjustment and see what is there. Subscription we have already finished. Opening stock option, this will come in the payment side because it's postage stamp consumed, so it will come in the expenditure side. Rent will not come here. Then no, nothing else is there. Then we can go with the other side, that is expenditure. Now let's see what in the expenditure side. First of all, we have got rent. So by rent, how much? 18,000. And there is an adjustment. So what is the adjustment? Let's put up the rent first. So say to rent is 18,000. Now let's see what is the adjustment. Rent for 1,500. See here, 1,500 rupees of the rent will be deducted from the income expenditure account, and again 1,500 will be added in the income expenditure account. I'm repeating why, because 1,500 is relating to 2005, whereas again 1,500 is unpaid. Unpaid means it relates to current year. So what will happen? Once it will be deducted, again the next years will be added. See, to rent 18,000 less outstanding for 2005 1,500, and again add outstanding for 2006, it is 1,500. That the ultimate total figure is 18,000 rupees. Okay, the ultimate figure is 18,000 rupees. Let's see what is the next one. After rent, we have wages. By wages 7,000. We saw there is no adjustment, so directly we can go to wages 7,000 rupees. Then let's see what is the next one. By bigger table will not come here. It's, yeah, interest. By interest 2,000 rupees. So it will come again in the expenditure side. To interest 2,000 rupees. Why it is coming two side? Because it is expenditure side. And payment where in the credit side here. It's not credit side. This is like a yeah, you can say it's credit, right? A credit side because it was a cash book, right? It's a payment account is a cash book. It's a debit and a credit side. So all the payments which is like in the credit side will go in the debit side of income expenditure account and the debit side, because receipts and payment account is a real account, but income expenditure account is a nominal account. Okay, the rules are different. That is why you find the credit items in the payment side in receipts and payment account, whereas you find the payment item, that is expenditures, in the expenditure side of income expenditure account, that is the debit side. ठीक है, सारे पेमेंट डेबिट साइड में मिलते हैं, इनकम एक्सपेंडिचर के डेबिट साइड में, जो एक्सपेंडिचर हम लोग बोलते हैं ना, एक्सपेंडिचर साइड. Then coming to the next one, by postage. So there is an adjustment. We know how much? 1,000. So this is the purchase. What is the opening balance of postage stamp? 300. So this 300. We'll start with this 300. And what is the closing? 200. So let's see how to do. It will be postage and stamps consumed. So two postage stamps consumed. Purchases was 1,000. Add opening stock of 300. It comes to 1,300. Less closing stock of 200 rupees comes 1,100 rupees. That is nothing but postal stamp consumed. Then let's see what is the next one. After that, the next item is salaries. It is 24,000. There is no adjustment in that, so directly it will come to salaries 24,000. Okay, now let's see what else is left. First point is over, second point over, third point over, fourth point. In the fourth point, there's the item called depreciation on furniture of how much? 2,500. Since we have already calculated, so directly we'll put it. It will go in the expenditure side as to depreciation on furniture 2,500. Okay, to depreciation on furniture 2,500. Clear? This particular point ends up the income and expenditure account since all the points are over. So now we will go for balancing the income and expenditure account. In the debit side, the total is 54,600. Okay, which is more than the credit side. So we will take it in the debit side total will take in both the sides. And since the debit side, that is the expenditure side, is more, so what will we call it? We call it deficit. Excess of income over expenses will be surplus, but excess of expenditure over income will be deficit. Okay, so here the expenditure side is more, and how much is more? 6,100. So what will you write? By deficit. By deficit. It's better if you write in the bracket excess of expenditure over income, 6,100 rupees. Clear? This will be deducted from the capital fund, that is a general fund, in the balance sheet, closing balance sheet. Okay, now let's go for the next part, that is the opening balance sheet. Why do we prepare opening balance sheet? Previously also I told you the opening balance sheet is prepared to know the general fund or capital fund at the beginning of the year. So let's see what is there. First of all, let's see what starting the opening balance sheet items. So first it is opening cash in hand 2,600. So it will come in the opening balance sheet asset side, cash in hand 2,600. Then moving to the next one, what is the next opening item? It is not this side also is not there. So now we'll go below, what is there? Opening balance sheet asset side 2,000, 1,200, the subscription outstanding. So it will also come here, subscription outstanding, subscription 1,200. Got it? Then now going to the next item, what do we have in the opening balance sheet? Let's see here, opening balance sheet. How much? 300 rupees of opening stock of stationery in the asset side, isn't it? So it will come in the asset side, opening balance sheet asset side, stock of postage stamp 300. Then let's see what else is the opening balance sheet here. Opening balance sheet liability side. What is that? This is nothing but the rent outstanding, right? So it will come in the opening balance sheet liability side, rent outstanding 1,500. Then what else we have? Opening balance sheet here, 15,000 rupees of opening balance sheet in the asset side, furniture. It will also come here, opening balance sheet asset side. See, opening balance sheet asset side. What is that? Furniture 15,000. After that, we have got opening balance sheet, this 20,000 rupees of loan, 10% loan of 20,000 rupees will come in the opening balance sheet. So it will also come here, loan 20,000. Nothing else is there. So we can, how we can say that nothing else is there, because from the beginning onwards we saw all the items of the marking, and we have ended up all the adjustments. So we can say that there are no more items of adjustment. So now what to do? Since all the items are over, so what will you do is that we will do the we'll find out the balancing of this balance sheet. Although I always say that there's no balancing done in balance sheet, because the total of both the sides will always tally. But when you prepare an opening balance sheet, the objective is to find out capital fund or general fund, which generally is done with the balancing of the balance sheet. The balancing figure will be the capital balance. So here it is. Let's see what is the total. We can see that the total of liability side is more. Sometimes it may happen that the balance sheet liability side will be more, okay, in the absence of the capital, obviously. So in that case, what will happen? The balancing figure will be taken as deficit of capital. So here you can see it is 21,500 in the liability side. In the asset side, what it is? 2,600 plus 1,200, it is 3,800 plus 300, it is 4,100 plus 15,000, it is 19,100. So 19,100 is obviously less than 21,500. So after deducting, we get it 2,400 rupees. 2,400 rupees is the excess of liability side. So that means if the liability side is more, that means it's a deficit of capital. The capital is moving in negative. What will you write? Capital fund, or you can even write general fund. In the bracket, just mention deficit. In the bracket, also you have to mention balancing figure. Clear? So this will come as a negative figure. You have to do a working note and you have to find out what will be the outcome in the closing balance sheet. Okay, clear? The opening balance sheet is clear. Now we have to take this one in the closing balance sheet, and there we have to find out whether the capital is going to transfer into positive or not. The chances are equally high and low, because there are some items which will be adjusted with capital, so it can move into positive. Let's see. So now we will go for the closing balance sheet. So in the closing balance sheet, first of all, we'll go in the liability side. Okay, So in the liability side, first of all, we start with capital fund, isn't it? So in capital fund, since we are saying already it is in deficit 2400, so let's see what is the surplus or profit, surplus or deficit, in what is the result of income expenditure account, whether it is surplus or deficit. So in the income expenditure account also we can see it is deficit of 6100. So we can say that since the capital is also negative, and adding up with the deficit, the capital, negative balance of capital is going to increase. That means capital fund will come in the asset side, it will not appear in the liability side, so it will appear in the asset side like this. You can see here how it is appearing. Capital fund will come at the end as 2400, the deficit, the opening balance deficit. Along with that, the deficit of income expenditure account, that is 6100, will be also added. That comes to 8500 rupees. Okay, the deficit capital comes to 8500 rupees. Okay, so that is the deficit of capital fund, it is 8500. Now we'll go with the remaining of the liability side items. So what is in the liability side? Let's say donation for building 23,000, so it will come in the closing balance sheet liability side as donation for building 23,000. Okay, now let's see the next item. What is there? Balance sheet, closing balance sheet liability side, we have got life membership fees of 7,000. Okay, so life membership fees of 7,000 will come in the closing balance sheet liability side, life membership fees 7,000. Okay, then let's go to the next one. Where it is that? Closing balance sheet liability side. Let's find out where is it. This side we don't have anything else in the box. Let's move out of the box. What is there? First point we don't have, second point we don't have, in a third point we have. What is that? Rent outstanding 1500 rupees. Okay, this 1500 rupees will come in the closing balance sheet liability side. So let's go in the closing balance sheet again and see outstanding rent 1500. Okay, now let's move back again to the question and let's see what is there after that. After that, in this point we have got, yeah, liability 10% loan was there of 20,000 rupees, that will come in the closing balance sheet liability side. So obviously it will go in the closing balance sheet liability side, means let's put in the closing balance sheet liability side loan 20,000. Clear? Now we can go for asset side, because since all the items are over, so we can go for the asset side treatment. Let's see what is in the asset side. In the asset side, okay, in the asset side, what do we have? Let's see, closing balance sheet asset side, where it is here. Billiard table is there. How much? 14,000 rupees. So this 14,000 rupees will come in the closing balance sheet asset side. Okay, billiard table. Yes, billiard table, 14,000 rupees. Now, if you maintain permanency and liquidity method, that is very, very good. Okay, so billiard table, 14,000 rupees. Then coming to the next item, we have got furniture. How much? Closing balance sheet, 10,000 rupees. But there is an adjustment, isn't it? Whole thing will come as a whole. This one, 15,000. All the things will come as a whole. That is opening. Just a minute. Yeah, here the depreciation on the furniture amount will not be 10,000. It will be rather the closing balance, that is 22,500. Okay, here I have mentioned it. 22,500 will come in the closing balance sheet asset side after depreciation, isn't it? So it will come like that. Say here it is given as a whole. Furniture purchase was 15,000. At sorry, furniture was having 15,000 of opening balance. See, furniture was having opening balance of 15,000. At purchase was 10,000. Less, here we are going to deduct the depreciation, then we will get the closing balance of 22,500. Okay, that is what will be done here. You can see furniture was having 15,000, at purchase 10,000, it is coming 25,000, less depreciation 2,500, after column 22,500. Okay, so this is how the furniture will be placed. Then going to the next one. What is the next one? Interest will not come here. Closing balance sheet, cash in hand. Cash in hand 4,000 will come. So you can see here cash in hand 4,000. Okay, now let's move to the adjustment. The box is over. As the receipts and payment account is over, let's see what is in the adjustment. First of all, subscription outstanding on 31st of December 2006. How much? 2,300. That will come in the closing balance sheet asset side, isn't it? This will come in the closing balance sheet asset side. Okay, 2,300. So let's go to the closing balance sheet again and write down outstanding subscription 2,300. Then going to the next one, what do we have? opening stock, closing stock of 200 rupees, closing stock of the postal stamp 200 rupees will come. So here it is, the closing stock of postal stamp 200 rupees. Okay. Now after that, what is there? Rent will not come here. Furniture is over. Loan is over. Subscription was there. That is over. Yeah, all the items over. That means since all the items are over, we can go for totaling the balance sheet. So if we do the total, we get that if the both side total of the balance sheet is 51,500 rupees. Okay, that means the balance sheet total. If it is matches, that means it is correct. Okay, if it is matching, that means it is correct. Clear? So this is how you are going to solve the Salmon. Complete Salmon income expenditure account along with the opening balance sheet and the closing balance sheet. I hope all of you have understood. Please view the video completely and take a good note of it. Okay. We'll be meeting in the next video. Till then, take care of yourself, take care of your parents, take care of your studies. Bye bye.